What to do, YouTube? It's your boy Go to Trades, and I'm back with a Straw Hat Trading Channel. And look, man, we have a very special video today. I remember about a month ago, I told you guys that this rally toward the top here is starting to feel like June and July of 2023. And then I went ahead and I kind of talked about why it felt that way. The very next week, I back tested it and I seen the exact same movement that we were facing now, and I compared it to the July 2023. And I said that exactly 1 week before FOMC is when we're going to get that initial sell-off, that initial push down, right? And look what happened. We got that initial push down. And I'll go over a little bit more when we get into the actual video, but it goes to show, a lot of people were really clowning or just talking a lot of smack. This, that, and the third. And look, I'm not here to say I'm right and other people wrong. And obviously, I have my opinions, and everyone's entitled to their opinions. But you can't talk smack before the actual thing actually happens, because then you look stupid when it actually does happen. You get what I'm saying? So yeah, that's what I gotta say. Anyways, that's enough rambling. Let's get into the weekly video analysis so you are prepared for the week ahead. All right, guys. So, this stock heat map of the S&P 500 index, we can see that majority of the blocks are red. Okay, we're starting to see some rotation out of technology and tech services, electronics, finance, and some health technology. So mainly the risk on assets have taken a hit. We've seen retail take a little hit as well, and we've also seen consumer durables, maybe transportation a little bit, but for the most part, we've been seeing energy, health services, and consumer services, consumer non-durables. We've seen these actually tick up. And this is kind of like more defensive. We're starting to see defensive rotation, so maybe there is something amiss that we aren't seeing right now in the market. So maybe that could be one of the reasons why we start seeing some selling pressure, and we'll just go over what that means for the market as we continue on with this video. Next, let's go through what is ahead for the market watch. Okay, so look, this week we have some major economic reports. Obviously, Monday we don't really care about Monday. Tuesday, we don't really care. All we really care about is this Wednesday, right? The FOMC interest rate decision. This is going to be very important. Are we going to pause? Are we going to cut? Or are we going to raise rates? What are we going to do? So, and after that, we also have the 2:30 Fed Chair Powell. He's going to talk about, why that decision is what it is. And then on Thursday, we also have the initial jobless claims, and we have PMI services. That's going to be pretty important. And last but not least, on Friday, we also have Powell talking again. Oh, and I also forgot to mention the video is having a GCC conference where they're basically going to be talking about their direction of, I guess, chips, and their direction of what they're going to be doing, and what models are like these companies are going to be doing, and basically just given a direction of the company. The CEO is going to be talking, so we're going to be talking about like the demand of chips and GPU capabilities and all that good stuff. So we're just going to see a lot of AI. So this is going to be pretty important. This is going to happen on Monday. I'm not sure if it's going to be after the market or before the market. Let me see real quick. Honestly, I don't care. I'm not going to look through. So this earnings report is not going to be that heavy. It's not going to really move the market that much, but I will say you have some names that are very important in terms of their sectors, okay? And it really comes off this Wednesday and Thursday. Micron it's a sleeper. Micron is a sleeper when it comes to the chip race, okay? I believe that Micron is one of those companies that a lot of people not really talking about. And if they are talking about it, they're talking about it because they've been going up since the year started, maybe 50% from where they were maybe a year ago. So, I've been watching Micron since it was at $50. And I've been saying that ever since Biden dropped that bill, basically for chip companies, that Micron was going to be the one to be looking for. So Micron is basically scratching $100 right now. So I'd be watching Micron. If Micron misses or guides down, that would hurt the chip market, in my opinion. Chewy is going to be pretty important. You should look at Chewy. Well, not important, but I think that'll be a pretty good mover. Lunar, I think that also be a pretty good mover. Nike as well, and if you want to touch Lululemon, that's gonna be pretty cool, I guess. But my watch, I guess I'd be watching for the most was gonna be Accenture only because and I've been saying this for weeks. I've been letting you guys know, I am a major bull when it comes to cybersecurity. I think that all the cybersecurity companies right now are all pulling back. I wonder why. They're all pulling back, and as they're pulling back, you have major whales in the market that's buying it. Even though it's still pulling back a little bit, you're seeing big money invest, okay? I wonder why. Accenture is one of those companies that I'd be watching for. I don't think that their earnings would push them, like propel them to astronomical levels, and if it does, it does. But I do think even if it does, it'll still come back down, only because logically speaking, a lot of these cybersecurity companies have been pulling back. So if this actually pulls back as well, I'd want to buy some shares on Accenture. I like Accenture. Anyways, let's continue. So we got our macroeconomic indicators within the dollar and the yields. Okay, so I've been kind of talking about how the dollar finally broke out of this box that it was in for a whole month. It's just been in a box. It finally broke out. Well, broke out to the downside. So we are now in this falling wedge-ish pattern, this downwards channel. I wouldn't even really call it falling wedge, but we're in this downwards channel, and right now we are trying to either break out or break down. If we actually break out of this channel here, I'd expect us to retest all the way up here to 104.2. This is where I believe bears will be trying to bring you down if they do. Remember, on a grand scheme, on a weekly chart, we are in a descending triangle. This is a bearish indicator. This is a bearish continuation pattern. We are in a descending triangle. I had someone in the comments telling me that this wasn't a descending triangle. I mean, I guess. But whatever you want to call it, whatever name you want to give it, it's the same thing. When you have a channel that's actually pointing you down, and every time you touch this channel and you retest the same demand area, this same support, every time you retouch this support, it gets weaker and weaker. So that is basically a descending triangle. So if it's not a descending triangle, then I guess you're smart, I guess. And I'm dumb. I don't know. But it doesn't matter. Whatever you want to call it, I don't care. But anyways, if you actually just keep breaking down and you retest this 101 to 100 level, then you'll just probably just keep making some type of pattern like this until you actually break down. Okay? So that's what I'm watching for. That is a possibility. But unless you break out here, like say you actually break out on the dollar, this is the bearish case, right? What I just talked about right now was the bullish case for the market. If you actually break down on this dollar, you'll look really good for the market. But me personally, I don't think that's gonna happen. And it's just my opinion, okay? Something is telling me, and it's just how the market is moving, like the dollar itself is moving, and how yields are moving. I think that the dollar might actually break out this descending triangle. Like, I think this is a potential breakout. So if we actually break out of this smaller channel and we find some type of support here, a base, we break out of the relative highs, this local highs here, we find another base and break out to this 105, from 105.5 to 105.7, man, this breakout will be really, it'll be telling. That'll be a W for the bulls. Because even if you actually find some sellers here, you have a whole base area here. Like, you have a whole base area here, okay? So if you actually find some type of base and you break out, man, that means that you have a whole new trend change on the dollar. And this is not on like a daily time frame. This can even like stretch out to the monthly. Like, you can potentially, because you see we're going sideways and we're flagging, right? At this point, we honestly should have been broken down. But if we end up actually breaking out, then we'll just be starting a whole new trend on a dollar. And starting a whole new trend, remember, when we had our bear market, it was over here, right? We had our bear market from February of 22. Like, that's when we had our bear market, when the DXY was just going straight up. You see, it was just going straight up. And now we had our bull market as it's going straight down and consolidating and just keeps rejecting. Now, if we actually change trend and we just go higher, this can be very scary. Okay, so I'm not saying that's what's gonna happen, but all I'm saying is just, you know, keep your head on the swivel, because this is something that can potentially happen. Okay, so I say all that to say this. Okay, set your alerts for the dollar. All right. If you actually break out above 105, then we are in trouble. But if we break down here, like say we actually just break down and we try to retest this 101, 110, 101, 100, then we are going to be bullish for the long term, in my opinion. Okay, so that's what I'm watching for. Anything can happen here, and I believe that my next week video, you'll have some more clarity of what's to come. Okay. Because right now we are just in the beginning stage. We have to see what's gonna happen here. So yields look like it wants to continue going up. Like, we were in this falling wedge pattern here on the yields. We end up breaking out. This was a falling wedge. I think someone said it wasn't. Okay, well, yeah. This falling wedge is a bullish pattern. You end up breaking out, and we got some downside on the market. So this is what we anticipated, right? So this area here is a lot. There's supply here, so I'd expect bears to step in and at least try to bring you back down to this local demand zone here that we've been forming. So this has a lot of liquidity. So if we actually break down here and we curl back up, I believe that we'll see some type of action like that on the dollar, which means we might just break out, curl, come back up, and retest this 104, 105 area. So that's what I'm watching for. If we get that same action, yeah, I do believe that we're setting up something massive. Okay, and the reason why I'm using the yields as basically I use the dollar as kind of like a guide to the breadth of the market, and I use yields as a guide to the breadth of the dollar. You know what I'm saying? So I use the dollar for the market, and I use yields for the dollar. So the yields, if we actually break out of this monthly channel here, right? If we break out of this monthly channel, guys, like we this yellow channel here, like we've been following this to the T, right? We've literally been following this for almost 2 years now. So if we actually like break out of this lower channel here, then like this lower channel would be like 4.5%. If we actually break out of this lower channel, we're going we are going to go all the way to this 4.95%. Okay, like that would be not good for the market. That means that we're going to be getting some massive sells. Okay, so just because a lot of stats are saying that we're very bullish, and I agree, we're very bullish on this market. I believe that even if we do get some type of pullback, like some meaningful pullback, it'll be met by buyers. Like there's a lot of good things that's happening in the market that I think is pretty normal to be optimistic about. But if we find our macro levels flashing warnings like this, guys, we could be setting up to sell. Okay, so that's what I'm watching for macros. If you guys have any questions about this, let me know. Maybe I might make a separate video about it. So here I want to focus really on the NQ and the ES, and I'll go over RTY and Dow Jones a little bit after, but I really want to dial home the NASDAQ and ES. Okay, now last week I told you guys about these 3 lines here, right? I told you guys about these 3 lines. Let me go ahead and put it on the daily chart so you can see it. So I'm not gonna go back over it. I'll just maybe cue the video in the description so you guys could see like what I was talking about. So basically I said that 1 week before FOMC, which is this green line here, last time we end up selling, and then we start going sideways to up, right? So on that Wednesday, Thursday, Friday, we start selling. Monday, Tuesday, Wednesday, we start going up. Okay, so I believe if this template is correct, I believe that the same thing's gonna happen. We already got our sell on Wednesday. Let me go ahead and show you guys. Okay, so 1 week before FOMC. I had erased the line because I didn't want to see it anymore. Boom, right? So 1 week before FOMC was right here. 1, 2, 3. We got 3 red days. So Thursday, Friday. Now on Monday we should have some. We should start bottoming out here, and this is like toward our Nvidia demand zone here. So that's very important. And it's look. We crash landed on this Nvidia demand zone here, and we found buyers, ironically, right before the Nvidia event, which is going to be tomorrow. So we should bottom out here, find some buyers, and this is going to be the day that we actually we might get some type of volatility, but at the end we should come back to the supply zone and then sell. Kind of similar to what happened last time, where we continued up, we found our bottom, we continued up, and we kept rejecting the supply zone area. The same supply zone that we couldn't hold that previous week. So if we get that same action, then I'd anticipate our supply area is going to be ranging from 18.3 to 18.4. So if we get some type of action like this will be confirmation. So I would personally start entering puts, long dated puts around here. This is my area for actually playing the market. I'd probably want to get into some QQQ puts. Maybe the 429s. That's what I'm looking for. And yeah, I'd expect that we get some type of sell pressure. Now, I told you guys already, we have a lot of buy zones here, right? The buy zones that I would want to actually get back long would be all the way down here. This 17.1 is where I want to get long. Anything between here, I'm okay. I'm not touching it. Unless we actually get a meaningful change of trend back to the upside. But right now, I'm anticipating some downside, and I believe that this buy zone at 17.1 is going to be my initial buy zone if we actually get some type of fake out to where we get the initial buy, but we end up maybe selling back down. I'm still not selling until we crack this. This is my double down buy zone here. And yeah, this is what I'm looking for more continuation to the upside. However, if you just break down, which I don't think will happen, but if you break down and give up all your games from basically the beginning of the year, then yeah, okay, then I'd be pretty concerned. Anyways, let's go to ES. It's very similar. The same action. I'm looking for basically the same action. I want to see if we find some buyers to start off the week. Let me go ahead and show you guys on the daily chart. So if we could find some buyers to start off the week, around right here, because this is a support line that we've been respecting for this whole rally. So we found some buyers here all the way up to maybe this, what is this? Maybe this 5200 area, 5250, 5230, around there. I'd expect us to find some buyers to bring us up here. But if we end up rejecting this area, maybe we reject this 5230, maybe we reject 5200. I don't know. I'm not sure what the range is going to be. Then that's what I'm watching for. If we reject the supply area, then that's where I want to get involved into some shorts, some puts on SPY. And my next level to watch will be this 5128. This is where I believe that you might get another bounce and another retry of supply. And if you fail, then we're just going to crash land to maybe your January high. So that's what I'm looking for. So again, maybe a bounce to this 5200, 5240, 5230, around there, this area here. And I want to take profits here, this 5126. And we might retry to 5180, 5185. And if we fail, boom, we should be crash landing to this 5020. Okay, so those are the levels to be marking down. That's what I'm watching for. Again, I believe we're going to be bullish for the beginning of the week and bearish towards the end of the week. If that happens, that will be a lot of confirmation. Technically speaking, we look amazing. I'm a buyer here. Every time, I told you guys, every time we hit this trend line on the bottom, I'm a buyer here. On Coinbase, MSTR, every single time we've done it, we've had a major rally every single time. Okay? This time, I believe is different. only because we've seen hot data prints, and this is the only time, guys, I'm not into the fundamentals. Not the fundamentals, the macroeconomics. I'm not really into that. In terms of data pools and data and dot plots, and I don't care about any of that. I care about what the chart says. That's me personally. However, this is the only time that I'm really going to have to use logic when it comes to the macroeconomics. If we get a reaction based on data, right, that drives the whole market down, which is, I believe, is going to happen. So if we actually get data that proves that we're going to be higher for longer and we're not going to see cuts, the RTY is not going to hold up. These are data dependent stocks. Like, these are mid and small caps that rely on borrowing money. So if that's the case, these are going to get hit the most. So even though technically speaking you look good, technically speaking, if data wasn't an issue, I'd maybe get this retest here at 2035, and we could just keep going back up to this 2180. Like, we could just keep going up. And that's what I'd personally like. But if we get a negative reaction, then I don't think we'll maintain this uptrend. Not to say that it's like the party's over. I'm not saying that much, but I don't think from a mid to short term we will. So I'm watching for kind of an action like this where we rally. Again, I believe that the first week we are going to rally. So if I believe that we're going to rally in the first week, maybe we might retest this 2090, maybe even this 2080 area. If we reject this 2080, 2090 area, I believe that we're going to come out of this uptrend and maybe we might get a bad reaction, maybe a large sell. Because again, this is very important. So if we actually get a large sell to maybe like even here to this 2000 or maybe to this 1959 area, this is where I could be a buyer too. I mean, maybe we can get some type of action like that where we crash land on this support area and we continue going higher. Maybe we create some type of inverse head and shoulders. Let me go ahead and drive it. Like, boom. Maybe we just create some type of inverse head and shoulders here. Maybe, maybe that might happen. That could definitely happen, And then we use this support as resistance. So if we continue it, let's continue this trend line here, and then use it as some type of confluence for this supply zone that we made all the way from 2021. Maybe that could be something, maybe that could be a play here. But I'm just not too sold right now on RTY. I'm just not too sold. Maybe it might happen, maybe it won't. Like, I'm just not too sold, and we're just gonna have to see. The Dow Jones, I believe that the Dow Jones is pretty bearish. Like, I mean, you were flagging, you broke out, and as you broke out, you're not really holding this flag. Like, it's one thing if we broke out, we held, and then we just continue going up. You're not doing that. Instead, you're breaking back down into this downtrend. So if we end up finding buyers here, so we actually found buyers, and we can't get back above this 38,750. If we can't get back above, then we're gonna crash land. Like, it's gonna be pretty bad. It's gonna be some type of action like this. Okay, so that's what I'm looking for the Dow Jones. What is next? Next, let's go over tech. And now I'm going to go a little bit faster because this is a pretty long video. So for tech, I do believe that tech is starting to look bad. I told you guys that potential head and shoulders was forming here, and it's looking like it's playing out. So all I'm looking for right now is a test of this neckline here. If we get a test and a break of this neckline, then we're going down. There's no ifs and buts. It's going to be a long way down for the big tech. But again, I do think that we found some buyers toward the end of the day on Friday, and I do believe that we're going to start curling back up. So my guess is that we're going to try to retest the supply zone, maybe right here at this 30.65, or maybe toward this 30.78, or even maybe this 30.90. Like, anything can happen in this market, but you do have some supply zones, some supply areas where you could actually just fail. So that's what I'm looking for. I'm looking to see if you actually fail going higher and do we just maintain this downtrend that we have here? So if we maintain this downtrend and we end up falling, so let me actually make it a downtrend, boom, right? So if we actually have a downtrend like this, we have a downtrend like this, and we end up failing here, so we come up, boop, we end up failing, I believe we're gonna break this neckline. Next we have XOK. XOK, I believe that right now you could just be setting up to do something great, or you could set up to do something nasty on XOK. It all depends on what happens this week. Again, I do believe that we're going to find some buyers this week, so maybe we might break out. Who knows? We might break out. I'd like a breakout on XOK. It looks like you've been trying to break out. If you break out, you break out. Maybe you have room to 220 to 225, maybe around there. But again, I do believe bull demand will be met by bears. So if we get some type of action like that, you still look pretty bullish, in my opinion, on XOK. The only time you're not bullish on XOK is if you actually break down below 204. So if we actually break down and we hold below 204 around here, then we have room all the way down to potentially 194, 195. And this is where, I'd possibly be a buyer here. So it's still, there's a lot of ifs and buts on XOK, but we just got to watch. See what happens here. QQQ, bearish. It looks bearish in my opinion. Anything could change here though. You look bearish. You close 2 days. You close for 2 days outside of your rising wedge. So as long as you just hold this trend line, this red trend line here, if we just hold it, then I believe we're just going to continue going down. So again, I think we're going to find some buyers. So if we find some buyers at the supply zone here at 438 and we fail again, I believe we're going to actually test down at this 420 level. Maybe 420, maybe what is this? This is 420, 424, maybe that area. But I believe that the 415, this 415, 414.96 is going to act as a magnet. So I believe that this is what we're going to be targeting if we actually break down of this 438 level. If we break down from there, and we also have to break down this 430 level. 430 is a major wall. If we break down 430, then that is more confirmation. Breakdown of 430 is confirmation for the 415 test, long dated in my opinion. So that's what I'm watching for. So a test and a fail of 439 on QQQ. I'm definitely hammering some puts, long dated, and hopefully we get to that 415 area that I'm talking about. Last but not least, let's go over the SMH, the SMH, SOX, and XSD. These are the semiconductor ETFs. I do believe that you are setting up to break. We actually broke outside of the semiconductor ETF. This happened before, and what happened? We actually end up rallying. Is this time different? Who knows? But I am looking for buyers to step back in. I do believe buyers are going to step back in. This is a very strong demand area here. So if we actually get some type of buyers, but we fail to break back above 230, 228, so we do something like this, I believe that bears are going to step in and just hammer you down, in my opinion. So we have to actually break above 2030 and hold it. If we don't, then I believe we're going down. Personally, same thing with XSD. We have to break above, and this looks super bullish last week. If we break back above 231, 230, then we have room to go all the way back up to this 251 target. But that's what we got to do. If we actually break back above 230 and we fail and we actually break down, we have room all the way down to 210, 204, 200. So that's something to pay attention to. Same thing with the SOXX. Guys, we have a lot of buyers here. Like, this is our buy zone here. This 216 area, this gap fill, we have buyers stepping up here. Even though this is a bearish hammer, I believe that buyers can potentially bring you back up, right? If we get brought back up and we can't clear this 229, 230 area, then we do have room to the downside, in my opinion. So that is what I'm watching for. If we fail to get above 230 on both SMH and SOXX and XSD, if it's 230, set your alerts. If we can't get above 230 on all these names, then I believe that the party might just be over for now, just a halt. Okay, so that's what I'm watching for all of these names here, and just some individual names that I'm watching. I'm just watching the SPY. I just want to see what the SPY is gonna do. If SPY actually, I believe SPY is gonna get some buyers. So if SPY actually gets some buyers and rejects this 514 area, if we reject the supply zone here, I do believe that we're setting up to fail. I do believe that we're setting up to retest this 505 into maybe 500 flat. So that's what I'm looking for. That 500 flat, if we give up that, then okay. Yeah, we might be going down to 480. So that's what I'm watching for. And that's really it. I already told you guys about the QQQ. I'm watching for the QQQ puts as well. And yeah, I'm really trying to short these ETFs, really. Individual names, I'm not really... I don't know. Like, with these individual names, I'm not really watching too heavily. The only thing that I kind of like for the most part is Microsoft. I do believe Microsoft is still holding pretty well at this 415, 416 area. So if we actually break out of this box here, we got room all the way to 430. You know what I'm saying? So Microsoft still looks pretty decent if you think about it. For the most part, and that's just for the upside. For downside potential, I think Meta has a lot of potential for the downside. So if we actually find buyers and we cannot break back above 490, guys, we will break back down and potentially test this 470 area, right? And if we test 470 and we can't even break back to 470, guys, look at this room we have to the downside. We have a lot of room to the downside. I'm not saying it's gonna happen, but we have a lot of room to the downside if we can't hold these levels above here. You know what I'm saying? Like, our last line of defense is 453. So if we can't hold above 453, guys, like, we have a lot of room to the downside. So that's really what I'm watching, guys. For the most part, we gotta see how the market develops, really. So if you guys enjoyed the video, make sure to like, comment, subscribe if you're new. This is your boy Go to Trades, and make sure to join the Discord. It's down below in the description, and follow me on X, all that good stuff. Everything down below in the description. And with that being said, stay green, stay motivated, stay positive, and destroy this market. Let's actually go crazy this week, okay? Anyways, I'm out. Peace.